And SoftBank reporting its first quarterly loss in 14 years early this morning, including a nearly $9 billion hit at its vision fund. The company didn't release a forecast for the current business year, saying that there are too many uncertain factors. Here's CEO Masa-san.
So this time earnings results announcement is not good at all. It's a big negative. And 3 months quarter result with this size of the negative is probably the first time after the foundation of the business. I want you to look at this picture. We are actually in the rough sea.
Joining us now to talk more about this is Dan Primack. He is business editor at Axios, and Rana Foroohar, who is global business columnist at the Financial Times. She's also CNN's global economic analyst, and her new book is called Don't Be Evil: How Big Tech Betrayed Its Founding Principles and All of Us. That's out this week. All right, thank you guys for joining us. We knew the numbers were going to be bad. Masa-san kind of addressed it head on. But how forgiving do you think his investors will be, since this is the first time they've really lost a lot of money? What do you think, Dan?
I mean, I think some of his investors will be kind of forgiving. The bigger question, though, is Vision Fund 2. Masa talked yesterday about it. He said, we're still on schedule. We're still going to start it. But he had no numbers. You know, remember, back in July, he talked about how he had over $100 billion in commitments. But those weren't really commitments. Those were kind of handshakes, and he had no new numbers now. Vision Fund is a big part of SoftBank in terms of value creation.
I'm just amazed, frankly, that we haven't seen this moment sooner. I mean, you know, these enormous funds propping up valuations that I think are just completely inflated. WeWork, Uber, these companies have a business model that I think, you know, it's not sustainable anymore. Investors want to see profits. They don't want to just see a market grab. They actually want to see companies that make money.
Right, and selling that to the public markets is a big issue to try and get your head around.
Yeah.
They were able to come up with this growth at all costs, this idea of never having to actually turn a profit because they were in the private markets.
Yeah.
Is this just a day of reckoning? Are you seeing changes that are happening at the VC level right now?
I think it is. I mean, it's interesting. You know, if you look even at the last 10 years, tech led the markets up. I think they're going to lead the markets down, actually. And I think that these bloated funds, these companies that come in and they, as you say, it's growth at all costs, but no profits. I think we're really at a tipping point there. And I think, you know, trade wars, a couple of bad jobs numbers, and that whole house of cards is going to begin to fall, I think.
Anything you think will be done with discipline and governance in some of these companies?
No.
Well, yeah, exactly, in a word, no.
Why?
Why? Because, for starters, okay, say you're an entrepreneur, right? And SoftBank comes to you and now says, you know, Masa's talking about, oh, we're going to insist on governance. You look at it and say, wait a minute, the last time you insisted on governance afterwards, that was WeWork, and you kicked out the founding CEO. If I don't need to take your money, why do I want to put myself at risk to get booted by you?
Yeah, but you know what? They're not going to be making investments like they did with WeWork, where you get 12-minute
trying to raise
conversation and you give them
$100
$4.4 billion. But they're not going to be raising $100 billion. They're going to be more careful with their money. And my guess is that other venture capitalists are, too. It can't be
but
like
you know,
the freewheeling
people
days
are
that we've
still
seen
starting big funds in the Valley. I mean, I am amazed at this. And it feels funny enough, something I cover in my book. I worked in tech in 1999, and I saw the last bubble. This feels so frothy and so similar to me.
Alex, I know that it's not your main area, that you're real estate and you look at markets and different things, but you also must get offered deals from time to time, like early investor deals, things like that. Have you seen any sort of the froth that kind of builds up? Does it make you wary? What do you think?
Oh, yeah, it makes me very scared, and we've been very fearful for a while in venture. But fundamentally, I'm a real estate guy, and I like NOI, and I like EBITDA, and I like keeping it really simple and dumb. If I can buy 5 times EBITDA and grow that over time, I have several ways of winning, both in multiple of sale and also in growth in the company. And then we can take that cash flow and reinvest it in what we really know.
Don't you think Jeff Bezos spoiled everyone? I mean, that was the model.
Well, it wasn't. It's not just Bezos.
But they bring that up. They bring that up.
Yeah.
You wait around, no profits, you get to $800 billion market cap before you get a profit.
But you don't make the losses that those guys are making either.
I know, but that's what people would always say. You know, let's grow revenue. Let's grow revenue. Let's build out the company. Let's build out the warehouses. But there's very few Amazons around.
Very few Amazons. And, you know, he could have taken profits really at any time. In I think Amazon is quite singular, but there's a lot of companies that come in and follow this
singular.
model.
That's the thing.
But it's interesting. The real estate connection. WeWork is actually bringing down property prices now in New York, in London. So there's this connection between these companies that you think are over here and the rest of the economy.
Becky, to your governance point, though, the other example is Zuckerberg and Facebook, right? Because when Facebook was still private, Yahoo wanted to buy Facebook, and the board wanted Yahoo to buy Facebook. Zuckerberg, though, had control of the company and said no, and that was a big, selling point for him. A lot of founders still look at that and say, wait a minute, if we give the venture capitalists control and somebody comes with a good offer, the whole thing's done. We want to be Facebook.
That's a fair point. It's just you got to find the right CEO and the right founder. And Masa-san was always seen as this person who trusted his gut, really knew what he was doing. Is that mystique gone?
Maybe for now it is, but remember, Moss is the most interesting investor, quote, in the Valley, in the sense of he was, had huge money, did great in the dot-com boom, lost almost everything, and then instead of kind of going back into his cave like most investors would do, he came back over the top and became the most, chasing risk the most. We'll see. Maybe he can pull this trick again.
Dan, let me ask you, companies are staying longer, private longer.
Yeah.
There's so much capital out there, there's so much appetite for risk. Is that a good thing? Or a bad thing?
I think it's a bad thing. I mean, look, it's bad for the public markets because, even take the Amazon example Joe said, the public markets were the ones who got to recognize not most of the returns, but tons of return, right? It comes out pretty young. There's a place to go. One of the problems with a company like Uber, arguably, is it's the private markets got all the value. And once the IPO came, there was no pop left after that.
100%. It's interesting. In some ways, it actually increases inequality because you get this tiny group of investors being able to take all the value in these companies. But I think that the debt bubble that is reflected in tech right now is broader than tech. I think that, you look out record amounts of corporate debt. I don't think Masa-san, I don't think SoftBank would have been possible without the last 10 years of QE, unconventional monetary policy.
We talked about that earlier. In a zero interest rate world, what you're surprised private values are high?
Exactly. Debt, risk, that's what you get.
And they're not marked to market.
Well, they were marked. No, because SoftBank kept leading.
You find out from the next thing, but they're not like normally. You can't do a market check on that. And you wonder, we always ask every Fed head, where's the malinvestment? How do you know there's not some comeuppance from staying at zero for so long? And they're like, well, Bernanke didn't even see it in the housing market in 2007. So where is it now? It's nowhere, really? Negative interest?
And you're starting to see it in all these weird places, like the repo market, a lot of distortions out there. We don't know where they're going to come from, but we know they're there.